Assalamualaikum warahmatullahi wabarakatuh. Let me introduce myself. My name is Suryanti with NPM 2241110 from Management Class 22B. Here I will explain the taxpayer reporting material. Taxpayer reporting. Tax reporting is one of the main obligations that must be fulfilled by every taxpayer, WP, in Indonesia. This reporting is an important procedure that requires taxpayers to submit details of their income, expenses and tax obligations to the Directorate General of Taxes, DJP, via a tax return, SPT. This reporting process aims to ensure that each taxpayer has fulfilled its obligations accurately and on time. The following is a more in-depth explanation regarding the types of reporting, the reporting process, and the consequences for taxpayers who do not comply with applicable regulations. Types of tax reporting. 1. Annual Notification Letter, SPT. Individual taxpayers. Annual SPT for individual taxpayers includes all income earned during one tax year, such as salary, honorarium, and other income. This report must be prepared carefully to comply with applicable regulations. Corporate taxpayers. For business entities, the annual SPT contains the company's financial reports, including all income earned in one tax year. Monthly SPT. This type of SPT must be carried out by taxpayers who act as tax withholding or collectors, as in income tax, PPH, Articles 21, 23, and 26. Every month, taxpayers must report the tax withheld or collected to support tax transparency and compliance. Reporting process. 1. Preparing SPT. Taxpayers need to prepare SPT by filling in all the required information, including data on income, expenses, and tax deductions. Data accuracy is a priority so as not to cause problems in the future. 2. Form filling. DJP provides an SPT form which can be filled in manually or via the e-filing application. Taxpayers are required to fill out the form completely and correctly to facilitate the verification process by the DJP. 3. Submission of SPT. After the form has been filled in, taxpayers can choose to send their SPT online via e-filing or directly to the nearest tax office. The deadline for submitting annual tax returns for individual taxpayers is March 31st, while corporate taxpayers have a deadline of April 30th. 4. Receipt of proof of receipt. After the SPT is received, the DJP will provide proof of receipt as a sign that the WP report has been recorded. This evidence is important as archives and as a reference if one day an inspection occurs by the DGT. Reporting obligations. 1. Timeliness. Taxpayers are required to report their taxes according to the specified schedule. Delays in reporting may result in administrative sanctions in the form of fines. 2. Data accuracy. All reported data must be accurate and in accordance with the WP's accounting records. Errors in reporting can potentially give rise to further inspection from the DGT. 3. Supporting documentation. Taxpayers are required to keep supporting documents for their tax reports, such as proof of payment, invoices, and other financial records, for a minimum of 10 years for archival purposes. Consequences of not reporting taxes. If a taxpayer does not report his taxes or does so incorrectly, he may be subject to criminal sanctions and fines in accordance with applicable regulations. These sanctions include the possibility of imprisonment for taxpayers who deliberately do not fulfill their reporting obligations. Compliance with tax reporting not only helps avoid legal risks, but also supports the country's efforts to achieve tax transparency and accountability. Types of administrative and criminal sanctions related to late reporting or non-compliance. Delays in tax reporting or non-compliance with tax provisions in Indonesia can result in various forms of sanctions for taxpayers, WP. There are two main types of sanctions, namely administrative sanctions and criminal sanctions, which are designed to provide a deterrent effect and encourage compliance with tax regulations. The following are details of the types of sanctions. 1. Administrative sanctions. Administrative sanctions are imposed on taxpayers who commit administrative violations, such as late reporting or underpayment of tax. Types of administrative sanctions include interest sanctions, given to taxpayers who do not pay the tax owed on time. The interest rate is charged at 1% per month on the amount of tax still owed. Calculations are carried out from the due date until the tax payment date, with a maximum delay period of 24 months. Fine sanctions. 1. For individual taxpayers, a fine of IDR 100,000 is imposed if the annual tax return, SPT, is not reported on time. 2. For corporate taxpayers, the fine that must be paid reaches IDR 1 million if there is a delay in reporting the annual tax return. 3. Fines can also be imposed for delays in reporting other SPTs, in accordance with applicable regulations and the type of SPT in question. 4. Increased sanction. This sanction is applied in situations where the taxpayer falsifies data or manipulates reported income. The amount of the increase can reach 100% of the tax that should be paid and depends on the level of the violation committed. This sanction aims to prevent taxpayers from manipulative behavior that results in tax avoidance. 2. Criminal sanctions. Apart from administrative sanctions, taxpayers can also be subject to criminal sanctions if they are proven to have committed serious tax violations intentionally, such as not reporting income or committing tax evasion. Types of criminal sanctions include 1. Imprisonment. For taxpayers who are proven to have committed certain serious violations, the threat of imprisonment is imposed for a minimum period of 6 months and a maximum of 6 years. 2. Criminal fines. Fines imposed for serious violations of tax non-compliance can reach 2 to 4 times the amount of tax not paid or underpaid by the taxpayer.
That's all my explanation of the material. I hope it's easy to understand. Thank you. Waalaikumsalam warahmatullahi wabarakatuh.